The economic outlook is now much clearer, and growth is predicted in most countries by the end of the year, according to the latest report by a leading UK economic independent commentator. The Centre for Economics and Business Research says it has seen two major breakthroughs in the UK economy, which has led them to follow a clearer central scenario.
We had two scenarios, one for high bank lending and one for massively low bank lending. We've now focused on a central scenario. This in itself is good news because we're able to have a clearer picture, understanding of where the UK economy is headed. However, we still think that where the UK economy is headed still points to about 4.5% contraction in GDP for the whole of 2009, and we see no growth in the economy in 2010. Pushing towards 2011, 2012, we do see growth coming back into the market with 1%, at least 1% growth for those years, and growth resuming to 2007 levels again in 2013.
There are two reasons why the outlook is now clearer. The first relates to the global inventory cycle, where companies have slashed stocks of finished goods, raw materials and imports, which have in turn pulled down growth rates. But this should soon stabilise. The banking rescue packages are also starting to work.
The banking rescue packages around the world seem to have boosted investor confidence and stability in the financial sector. We've actually seen the number of mortgage approvals by the Bank of England increasing, but remaining still roughly constant at just over 30,000. The second reason is that we know from the economic accounts in the UK that there's been a huge rundown of global inventory. Firms have been destocking massively, and this has brought GDP growth down significantly over the last few quarters. Now this at some stage has to stop, and firms will have to switch on their production lines once again, and this will start to support GDP by around 2 to 3%, seeing growth come back into the UK towards the end of 2009.
The report said the $1 trillion package announced at the G20 last week would not have a significant effect on short-term global growth. It did, however, praise UK Prime Minister Gordon Brown for his handling of the summit, saying it had come at a significant time and boosted confidence in the prospects for the global economy.
What we've seen in previous measures to stimulate coordinated action to stimulate the global economy has been a lack of detail. I think what we saw in the G20 was significant amount of detail coming through, detailing exactly how they would raise the $1 trillion through the printing of SDR with the IMF. And so I think the key point of the G20 was to get everyone together and boost confidence, but also enabled us economists to have a clearer understanding of world leaders' key opinions on what is needed. And we didn't have that before.
Job losses and squeezes on pay are set to weaken consumer spending for a while yet. But with bank lending no longer falling and the supply of mortgages rising, the Centre has outlined a more hopeful economic future by 2010.